ESG investing, or environmental, social, or governance investing, has been growing steadily over the years, and that's kind of reflected in BlackRock's 2020 survey amongst Singaporean investors. According to them, about 43% of Singaporean investors aren't aware of this thing called sustainable investing, but about 80% want their investments to have positive impact. That's great. Well, if that's true, then there's probably going to be a lot of interest in this video. But seriously though, I've been interested in this subject for a while and wanted to do a bit more research, and here I am in this video to share what I found. I try to answer a few key questions like, does ESG investing really make a difference? And is it a profitable way to invest? And of course, for investors like us, how do we go about it? Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll get better with saving, spending and investing. So let's start by broadly defining what is ESG investing. Simply put, it's investing in assets that score a little bit better on some measurement of E, S, and/or G. The E for environmental naturally covers things like impact on the natural world. Social covers impact on society and people. And governance covers things like good corporate behavior, which includes things like corruption. And the type of investable assets usually includes stocks or bonds, but in some cases even real estate. Now the funny thing is, there is no single measurement, so it really depends on who's measuring it. The data is usually compiled and analyzed by third-party agencies such as Sustainalytics, Bloomberg and even MSCI. And with that data, some major investors such as Vanguard and BlackRock will develop their own methodology on how they piece it together and offer investors like us many different options to choose from. So the first big question in my head is, does ESG investing even have positive impact? Or is it one of those scenarios where I'm walking into McDonald's, ordering a large supersized meal, but then having a Diet Coke because that makes me feel good? So great news, my cynicism was dispelled because yes, it does have positive impact. A research paper was recently published by Wharton and University of Chicago. It quotes that ESG investing increases the number of green activities in the economy while reducing the number of brown activities. And it does this by making capital cheaper for these companies and at the same time increasing their value in the marketplace by more green initiatives that are invested in. While that's comforting to know, if you're an investor who's a little bit more concerned about performance rather than just being led by his heart, the natural question is, what's this going to cost me? The first thing to note is that the cost doesn't necessarily get higher because there are so many options around. The bigger concern about cost is this going to cost me in terms of performance? Does ESG investing mean that I have to settle for inferior returns over the long term? From the research that I've done, it really does seem a little bit like a mixed bag. And again, it's because ESG investing is so broad and there is no single standard. The research paper that I mentioned earlier expresses that ESG investing does have lower expected returns. However, it does acknowledge that the more interest there is in the space and the more money flowing into it, it can positively impact the performance. So in this chart that I'm about to show you, 2 ESG funds have been used to benchmark versus the S&P 500 and the total US markets over the past couple of years. It's pretty encouraging to see such great results, but I'm also mindful that when I dig into the components of those 2 ESG funds, they're about 35 to 37% weighted towards tech stocks. So of course, if you've been paying any attention to the markets at all in the past couple of years, you realize that tech has been doing really well. So I'm unsure of whether or not it's the component of tech or the component of ESG which has resulted in such positive returns. Or coincidentally, could it be that just tech companies are just more ESG friendly? Who knows? And as with all things that matter, it's the details that make a difference. And in the research done by Mundi, I appreciate the nuances that they brought up. They found that in 2010 to 2013, ESG investing broadly had underperformed. But between 2014 and 2017, they did see quite a lot of positive returns, particularly in US and Europe. What was even more interesting was that in the US, it was the E component or environmental component that did better, but in Europe, it was actually the G component that was doing better. And as always, there are links below in the description for you to read more about it if you're interested. What's also below is the like button, which I really hope you'll click, because that tells YouTube to send this video out to more people, and honestly, it really does help my channel grow, and I would appreciate your support. Thanks. So while the research and theory is really interesting, it does make investing in ESG a little bit more complicated if you were chasing pure returns. But if you were seriously considering ESG investing, perhaps chasing maximum returns isn't really your top priority. And that naturally brings us to the question of how do we start with ESG investing? The first question to ask yourself is how involved do you want to be in the process? If you were a stock picker, you could literally look for the ESG information yourself and make those individual decisions based on your own criteria. For example, if you went on Yahoo Finance, you can see quite a bit of data that are done by Sustainalytics, or you can go on the website themselves. A lazier but more practical approach, in my opinion, is to use either unit trusts or ETFs. In this universe, there are plenty of options as well, and there are active funds and passive funds, and of course, each individual provider has their own metrics and way of thinking about ESG. But I think it's safe to say that popular issuers such as Vanguard and iShares are really great options to start with. And FYI, when it comes to the strategies of ESG investing, it generally falls in a couple of camps. The first is exclusion, which is basically excluding companies that are doing harm to any of those ESG factors. And the other broad strategy is inclusion, which is basically selecting the type of ESG companies that the fund wants to be involved in. And these could be niches such as tackling climate change, sustainable agriculture, or even diversity. And finally, it's a choice of where to invest as well. And in this case, it's something like the world is your ESG oyster. You could look here in Singapore where there are companies that score well on ESG. You could look at many funds that are available for the US, the world, even emerging markets. Now, before I sign off, there are a few key points which I find very encouraging about the space, which I thought you should know. First is that it's a growing field that's attracting more and more money. So the implication of this is that as more money flows into green funds, hopefully it creates a positive spiral in performance as well. A second good point of view which I read about is that strong ESG scores in a way can be thought of as a proxy for good management. And if you think about it, if management is able to consistently deliver on stringent criteria in ESG, it is likely that they're running a pretty tight ship as a company as well. That should translate to a better performing company overall and hopefully better stock returns for investors like us. Another interesting point, especially in a world that seems to be going from crisis to crisis, is that ESG investing can be thought of as a way to protect yourself against some of those risks. And this could particularly be true for companies that are better protected against climate risks and perhaps even governance issues such as corruption. And finally, there is a softer ESG theory which I find quite appealing to believe in. An example would be employee welfare. And if better ESG scores means that employees are happier because they're well taken care of, that should also translate to better brand ambassadors, and hopefully again the company is one that higher quality talent want to work for. People that work in there are naturally talking positively about the brand and the business. The other example is diversity, and that's also been shown through multiple pieces of research to produce better results overall for the company. The one hesitation that I have with this ESG space is that as its popularity grows, it's almost a little bit like a bandwagon that everybody's jumping on because it's trendy. And that might result in some people just really being very loose with some of the descriptions or definitions of what ESG investing is. Nevertheless, this is a space that I might want to pay more attention to as the year goes by. What about you? How do you feel about ESG investing? Is that something that you believe in or want to get involved in? So but that's it. Thanks for watching. And if you guys got any value out of this, I would really appreciate your support in clicking that like, subscribe, as well as that bell button, because as always, I'll be back again next Sunday with a brand new video. And until then, you take care and keep playing your own game.